So we are going to continue from where we stopped the last time. We are looking at obtaining and charging for professional work. That is where we stop. We are on chapter 5, practice management. That's what we started. And we've been able to look at the meaning of practice management, quality, system of quality management. We've been able to look at the benefit of having a system of quality management in place in an audit firm. We've also been able to look at the challenges it poses when you don't have a system of quality management in your audit firm. We have looked at the types of quality management procedures that exist, the ones that affect each individual audit engagement that is related to ISA 220. Then we have looked at also the one that has to do with the audit firm as a whole, that reference International Standard of Quality Management #1 and also International Standard of Quality Management #2 that talks about the engagement quality reviews and auditing of financial statement, auditing of financial statement of in an audit firm. We look at all of that in the previous class. Now we are taking it further. Since we said that we are going to focus on what is obtainable in an audit firm, we are moving to the next stage now. With that understanding and summary of what we've done before, we are going to continue now. So in audit firm, you also need to know that in audit firms, right, they are in existence or they are established not as an NGO. They are asked to make profit because at the end of periodically, audit firms also share profit to their staff, okay, periodically. Some do it annually, some do it quarterly, some do it semi-annually. But at every point in time, they share profit they made from their practice with their staff. So that's why we are looking at this area. So just for you to know that audit firms, they are not out for charitable purposes. Rather, they are out to make what? Profit. Okay. So now, because they are out to make profit, there's need for them to also make some form of advertisement when they want to get clients, because there is a song that says that even Dangote too is still looking for money. So as rich as Dangote is the richest man in Africa, for him to still be looking out for him to still be looking out for money or trying to get more money, it means that audit firm also, they are not exempted. Okay. Now, when they are trying to advertise to make their services known to the investing public or to the general public, as the case may be, there are certain conditions they need to fulfill. Like I always say, the time I qualified, right, it's an aberration. It's even forbidden for you to advertise your services as an audit firm. They just have to know you somehow, but you can't advertise. But that has changed over time. So they now advertise. So in trying to advertise your businesses or your services to your clients, there are certain conditions that or requirements that must be met before that can be done. And we're looking at those requirements now. Number one, anytime you are going to advertise your professional service or market your professional services, you must not bring into disrepute the professional body, the firm, or the profession as a whole. So what that means is that in as much as you are a representative or you're an ambassador of the institute, there is a way you present yourself that they will say, oh, this person is coming from a reputable professional body. For instance, if it's somebody that has been known to be dubious, or that has been known to have done something negative in the past, or that has been known to have done something that is illegal in the past, when you are coming out to represent a body as the Institute of Chartered Accountants of Nigeria, with that bad reputation, is going to rub on the institute. That's what we mean. So as a chartered accountant, you are supposed to be someone that is professional, someone that is calm and collected, someone that knows that is an epitome of knowledge, someone that is bold, okay, to be able to handle whatever challenges that comes his or her way. So that is the kind of approach that you need to put forward, and that is the only way you will not be able to bring disrepute to the institute or to the firm or to the profession as a whole. Secondly, you must not make exaggerated claim for services offered and your qualification. Okay, and you must not make exaggerated claim for services offered, qualifications possessed, or experience gained. What we are saying here is that at all times you must be what? You must be honest and truthful, and not what? Mislead your client. For instance, you have a client that wants, or you have a prospective client that needed the services of a forensic expert, and you don't have the competence yet, because you want to get the service, you want to get the audit fee for the rendering of that service. You claimed that you had a resource that can handle forensic accounting or forensic investigation. That should not happen. Okay, that's what we mean by making exaggerated claim. All right. So for services that you have not rendered before, you don't have the competence to render them, do not make false claim that you can do it, because at the end of the day, it's going to have a negative effect on the firm, and it can also rub on the institute, saying that you are not what you claim to be. All right. The third one, you must not discredit the services provided by other firms or make disparaging references to unsubstantiated comparison to the work of another chartered accountant. And this one is very glaring. Why I'm using all of these examples, and I'm not just reading in verbatim or just trying to gloss over this thing, is because in exam, you might not be able to see questions that can just be self-directing or that are just straightforward. That's why I'm using some of these instances, so that when you see some of those case studies, those are what are going to point out to you as pointers or areas that, oh, this thing is talking about what we have already discussed in the class. So what I'm saying here is that if you go to any audit firm, you will not see an audit firm that says that they are the best audit firm in Nigeria or the best audit firm in the world. You never see. Likewise, you will not see any ICAN tuition center saying that we are the best. Others follow. You will not see. Not that. So the way it is here for the accounting profession is that when you say you are the best, what makes the others is that you are saying others are what? They are second best or they are inferior. They are not as good as you are. And by so doing, that can be self-demotivating to them. And that's what we mean by saying that you are making disparaging references, or you are saying something that you have not substantiated. You have not substantiated any information. You cannot just say it and say that, oh, we are better than that audit firm that is in Paja, or we are better than that audit firm that is in on the island. You don't just talk about your own audit firm. That is all. You make a decision. You market only your audit firm. That is what we are saying. So don't discredit. So what you should have said is that we are one of the leading audit firms in Nigeria. You are one of the leading audit firms in the world. You are one of the leading tuition centers in Nigeria. Like our center, equity professional, you never see us say that we are the best audit and we are the best tuition center, ICAN tuition center in Nigeria. You never say so. You say, well, we are one of the leading, we are one of the best, we are one of the foremost. That is what we use. So when you see questions that says that, oh, around an audit firm that says that it claims that it's the best audit firm, that means that it's making disparaging references or making some unsubstantiated comparison with the work of other chartered accountants. Okay. Then also, as one of the requirements, also, you must not break the locally organized code of advertising practice in Nigeria. In Nigeria, the advertising practice is being governed or regulated by APCON, that is Advertising Professional Council of Nigeria, APCON. That is the body that regulates advertising on the billboards, on the radio, on the media, everywhere. That is the body that is capable of sanctioning anybody that does not comply. So above all what we have said earlier, this particular one that relates to the Advertising Professional Council of Nigeria also needs to be added. Aside from the fact that you have complied with the earlier ones that I've said, you also need to abide by the code of practice for the advertising in Nigeria that is being controlled or being regulated by APCON. All right. Then also, you must not give discounts or offer discounts. For instance, you render several services. You don't say that because you are rendering 3 or more services to a particular client, you can give a discount to that particular client. The answer is no. For all the services you are rendering, you should take them as one and each. Not that you are taking them as a combo and say that, okay, because it's a combo, you can get discount for this one or you get a bug off for this one. No, there's nothing like discount, particularly to new clients. You cannot give discount for the service that you are rendering, okay? Then also, you must not make comparison with the fees of other service providers. Don't say, if you go to KPMG, for this service, they are going to charge you this amount. Do you know how much you are going to charge? Also, you are charging you something less or something that is better. We can perform it better. You shouldn't make all of those things. So what you charge is what you should just focus on. Nothing, you don't have any business with any other audit firm. Just focus on your own audit firm. Try to market your own practice. Okay, so that at the end of the day, if the client is convinced, such client can decide to come to your audit firm and you now become their external auditor. All right, so that is the rules for advertising and publicity that we have just discussed. Any question before we proceed? Questions, comments? Questions, comments? Are we good to go? Someone should please respond. Are we good to go?
Yes, sir.
Okay, so we go to the next area. Now, if you look at the practice, if you look at the practice itself, that is audit practice. There is nowhere audit and accounting practice, or you call it assurance, audit and assurance practice in Nigeria. We don't have a standard rate for fees. We don't have what? A standard rate for fees. So that's the reason why you see there are different, there are variants or different types of fees that can be charged by the audit firm. You go to one audit firm, they charge this, or you go to another audit firm, they charge different fees, okay? So what does that mean? That means there is no regulated amount that can be charged as what? As fees. However, yes, we don't have regulated amount that can be charged for services rendered, but there are criteria. There are criteria that can be used to determine how much or what will be reasonable as the audit fee for the service you are about to render. There is no regulated fee by the institute, but there are criteria that can be utilized or considered to be able to determine whether the fee that is being charged is reasonable enough to be able to carry out the engagement, okay? So those are the things we are looking at now. So the determinant of audit fee are what we want to discuss now. The first one, the seniority and the professional expertise of the person necessarily engaged in the work. Now, what this one means is that the more experience you have gathered in the field of audit and assurance, the more likelihood the fee, the fee will be what? Will also be increased based on your what? Based on your experience that you have gathered over the years. All right. So what I'm saying is this: you cannot compare somebody that has over 20 years work experience in audit and assurance with somebody that just qualified or that just graduated or that just started work in an audit firm. They cannot earn the same fee. And what you also need to note is that the audit fee for audit and assurance service is charged per hour. It's not charged per month, it's charged per hour. So that is why you see we are very observant. When auditors come to your organization to work, they charge you, they tell you that we have this number of hours to work. That is the basis. So the number of hours, number of days they are going to work will be converted to what? Hours. And that's what they are going to use to calculate their audit fee. Okay, so that is one of the determinants of audit fee. The second determinant of audit fee is the time expended by each. So for each engagement, the length of time you spent in performing an engagement will be a determinant of how much the audit fee will be. For instance, if you are spending like a week or 2 weeks to get an engagement done, you cannot compare the same as when you are carrying out an engagement and you are spending 2 months there. It won't be the same because you are spending more hours, you're using more resources. So in that vein, right, the audit fee will be higher than that of the one you did for 2 weeks. That's another determinant. Another determinant of audit fee is the degree of risk. The degree of risk and responsibility which the work entails. That's another one. So the more technical the engagement becomes, the more the audit fee is likely to be high or to be increased. So if you have an engagement that is straightforward, that will not take the auditor more than 2 weeks to get it done, you cannot compare the same auditor that is doing another audit engagement that is highly technical or that is highly risky. So let me give an instance of risky engagement. So you have a client that has come to your audit firm, and these are live scenarios that can happen in real life, right? It can also be used as a case study in an examination. So you have a client that has come to you, and the client said that he got a reference of your audit firm from a particular colleague somewhere. And the colleague that referred you to me said that you are the only one that can save our company because we are at the verge of being what? Shut down permanently. What was the issue? They had issues with the relevant tax authority, that is the Nigerian Revenue Service, formerly known as the Federal Inland Revenue Service, that they underreported their profit. That means the profit, the CIT that they paid was lower than what they should have paid. So they have done a series of background investigation, and they said that the only thing that remains now is if they can get a credible audit firm that can review their taxes, computation, liability, and they can make them to get some level of assurance, reasonable level of assurance from the Nigerian Revenue Service. And that is why they have come to you, because they believe that you have been in existence for a while and you have a good reputation. Aside from that, you have a good client base. So that's why we have come to you. In that instance, you are their saving grace. If you can't help them in that instance, that means that prospective client is likely to what? To lose everything. And if he lost everything, it's going to add to your own reputation, because they will say that you are the one that audited them last, you are the one that they came to last. It's going to, one way or the other, directly or indirectly, is going to affect your audit firm reputation. So in that instance, it's a risky engagement. So if you have decided, based on all these antecedents, you still went ahead and said, okay, we'll take it head on. We can do it. You have decided to take it head on. What that implies is that the audit fee you are going to charge might be higher. Because in your audit fee, you are going to factor the reputational risk, the other risk that you are likely to face in there. Because it's a 50-50 chance. It's going to be what? A 50-50 chance. So that's an example of what? Degree of risk or responsibility that the work entails. So that could be a determinant of how much you are going to charge. The last one here is the priority and importance of the work to the client, together with any expenses properly incurred. Now, this is another one. You have a client that has come to you that wants to secure contract from the federal government. And as part of the requirement from the Bureau for Public Procurement is that you must present what? An audited account. And you have just 2 weeks to get the audited account submitted. and it has come to you that I need this thing like yesterday. I need this thing like oxygen. Can you get it done for me within 1 week? You fully aware that it's not a big organization, but I just need this, or your audited, I just need this your stamp to show that my account has been what? Audited. In that instance, is at your mercy. Is becoming what? It has come to you because he needed this like oxygen. So that will also be a determinant of how much you want to charge, because that means that you are going to forego other engagement and focus on this one. You are going to divert resources from other engagement and focus on this one. That can bring about increase in what the audit fee will be for that particular client. You can see that I'm using example some of these things. The reason I'm using example because in the exam, it's not going to be what are the determinant of audit fee. They are going to bring you a case study. You analyze the case study, you're able to look at it, whether it's talking about how to calculate or how to arrive at the audit fee for the particular client. So, like I said, this is not exhaustive. If you still need more on your own, you can do your research. But as far as this class is concerned, these are the ones that we've been able to come up with, and we believe that these are very, very weighty determinants that if you put it down, if you come out in the exam and you put down some of these points, you'll be able to get a good score from the examiner. Okay. So also, when you have started an engagement, and upon starting an engagement, the client now said that you have to look at some other area that is expanding the scope of the audit engagement. In that instance, you might need to bring in you might need to calculate another audit fee. It's going to be what? Extra work required. Okay. So because of that, you might need to do what? You might need to submit another audit fee for the extra work required. So that amount, that fee will be different from what you had already negotiated in the first instance. Okay, I hope that is clear. So we go to the next one. We talk about tendering. Now, tendering is very, very is common in audit practice. Okay, so what do we mean by tendering? Now, tendering, what it means is that it's a commercial process used or widely used by companies, especially large companies, when they wish to change their auditors. So when big organizations want to change their auditor after spending the required number of years, for instance, for the public listed entity, the required number of years that the auditor can work for you is 10 years. After the 10th year, you need to tell them you need to advise your clients to get another audit firm. So at that point, they will need to, if it's a big organization, they will need to use this tendering process. Now, this tendering process is what is used to be able to select from the prospective audit firm that has indicated interest, be able to select which one will be the better one or the best one that we can use that will suit our organization. All right. So this tendering process is divided into 3 parts. You have the initial consideration, you have the tendering process itself, and you have the evaluation of the tender. These are the 3 stages that you have in tendering process. The tendering process, the initial consideration is about self-evaluation of the audit firm. Self-evaluation of the audit firm, that is, knowing fully well that before you commit resources to such a tender, you are going to, in doing that, in submitting the tender, you are going to use resources, both time, money, everything are going to be deployed. And before you can deploy, you must be sure that you are most certainly going to get that engagement. If not, there's no need for you to decide to tender when you are not sure. So before you commit to any tender, you must ask yourself these questions. If your answers to this question as an audit firm are affirmative, that is, they are positive, then you can go ahead. But if your answers to these questions are negative, then you don't need to bother yourself with such a tender. These are the questions you need to be factual about it by yourself. Ask yourself, does the firm have the expertise to carry out this audit? Do you have enough manpower, skill set to be able to carry out, to be able to execute this audit engagement if you eventually get the tender? Number 2, does the firm have, or could it have sufficient staff available at the appropriate time, knowing fully well that in audit firm you have peak period and you have off-peak period. Peak period are those periods where the audit firm is very, very busy. All the staff sometimes they even sleep at their client offices because they have to deliver on some of their audit report, particularly within the first quarter of the year. If you have clients that are in the banking sector or financial institution sector, there's a money that their financial statement must be submitted, or the financial statement must be submitted on or before 31st March of the following year. So that is why from January to March, for most audit firms, it's usually a busy time. So when you have a tender that falls within this peak period, you need to look at it. Do you have enough manpower to drive this engagement? That's what we mean by that. If your answer is yes, fine. The next thing you need to ask yourself, are there any ethical reasons why the firm could not act? What that means is that, is there anything that is stopping the audit firm from doing what? From submitting the tender? Meaning that, do you have any is there any relationship that will hinder the tendering process? For instance, are you related? Is there a familiarity threat? Okay. Are you sure that there is no connection between any member of the audit firm and the prospective client that says you should tender your interest for the engagement? You need to ask yourself. If your answer is yes, then you can proceed. If there are no any ethical reasons and your answer is yes, you can proceed. The next one. Are there any problems of which the firm is aware with the current audit or auditors, particularly in relation to tender? The firm should also ask itself. Now, remember that when you are carrying out a tendering process, you are allowed to make professional inquiry from the existing or the outgoing audit firm. Ask them, is there any risk that we face if we should tender for this kind of engagement? If they want to be truthful with you, they will come out truthfully to you. So if they have any genuine concern or reason, you can, because of that, not want to show interest if they have explained it to you. But if you are still interested, that it's still something that you can still do, then that means your answer is yes. Okay. They also need to ask, why has it been asked to tender? Why have you been asked to tender? Why is the publicity saying that they invite people to watch? Okay, where is the publicity? Why do we need to tender? What is the need for us? Okay, so some of the things could be that you're trying to increase your client base. It could be that you're also trying to increase your revenue base as an audit firm. Okay, so you need to understand why you need to tender. It's very, very important to have that understanding. Also, you need to also ask, could it or should it offer to do the audit for a lower fee than other firms are likely to quote? So before you tender, you also need to look at the class or the type of engagement. If you have the big four that are also trying to get this kind of clients, also that are going to tender as well. If you reduce your audit fee, are there any chances that the prospective client will choose you at the expense of the big four? That's why I said it's about self audit or self-evaluation. So if your answer is yes, then that means you can continue, you can proceed. Then also you don't need to ask yourself, are there any reasons why the audit is particularly attractive to the firm? For instance, all the clients that you have, because you are a small audit firm, all your clients are those that are enterprises or and co. Okay, you have enterprises, Ade Enterprise Limited, Mama Junior Shop, Mama Junior Enterprise, all of that. You don't have any big clients. This one now is requesting is a telecom organization, and you know that these ones the audit fee will range from let's say 20 million or 30 million thereabout. So it's going to be a big lift for your audit firm. So that could be the drive behind your interest in about to do what? to tender. If all of these evaluation, these questions, and the last one here, what audit risks might arise with this particular client? You can also ask yourself, what are the audit risks? What are those things that are likely to happen? Are you foreseeing that the management will be able to cooperate with you? You have the risk that there could be some disagreement, that the client might not be able to work with you or want to work with you. All of this must be analyzed. And if you answer to all of these questions after evaluating yourself as an audit firm, if the answers are yes, then it means that you can go to the next stage of what? The tendering process. That is the tendering process. Now, before you go for the tendering process, you need to have carried out what is known as what? A preliminary audit risk assessment. What do we mean by a preliminary audit risk assessment? Now, a preliminary audit risk assessment is an assessment that is done before the engagement is started. If I can use that word. You have to, once you have indicated, once you have interest, you can write to the prospective client and say that, oh, I'm interested, but I need to carry out some assessment of the audit of the client, so I'm able to know if I will be able to cope. So it's an assessment that is done, able to evaluate all the risk or have an understanding of what the engagement will entail before you commit resources to such engagement. So in doing the preliminary risk assessment, you are able to do some background checks about the owners of the business, the type of business, the industry where the business belongs, what is their revenue, what is their SaaS strength, how many locations do they have. All of these things you will have known it when you are doing your preliminary risk assessment, because that is going to help you in your planning process. Without conducting a preliminary risk assessment, you will not be able to carry out a proper audit planning. You'll not be able to know what audit approach you are going to use, because you don't have an idea. So the whole essence of the preliminary risk assessment is for you to gain an understanding of what the client business entails. So that's one of the things you need to do before you tender. Okay? If you have answered the questions in the first instance correctly. And secondly, you also need to look at the fees, because you need to, from the preliminary risk assessment, you need to determine what the audit fee will be. You'll be able to analyze. You're not able to get everything, but from at the close, you can say, okay, this is what likely the audit fee will be if I tender. Because in your tender, you must include your proposed audit fee. It must be there. And also, you need to also include a brochure. A brochure, or a broker, you call it, is a summary of information about your audit firm to the client. That brochure or broker include your client, how long has it been in existence, who are the key audit partners, what is the client base of your business, of your client, of your firm. All of those information will be provided in the brochure. It's just a small document that advertises in summary what the audit firm is all about. It gives an overview of what the audit firm is all about. Okay, so that will also be attached with the tender. So with the tender, you have the brochure or the brochure. You have the proposed audit fee, right? Will also be there, and other documents that they will ask. Okay, they are going to ask for some other documents. For instance, they ask for your tax clearance certificate as an audit firm. They will ask. Okay, so all of this information will be asked. Okay, and you have to provide everything. All right, so that's what we have here. You can see they got information about the client, establish a precise scope. You can see preliminary risk assessment. All of them are there. Okay, so that's what you are going to do at that stage, and we are going to also explain the other services. So in that your approach, you're going to explain other services that you can render aside from that particular service. You can see maybe you render. There are put there that you can do bookkeeping services. You can also put there you can do recruitment. You can also put there that you can do internal audit outsourcing. You can put there you can also do business advisory service. All of these things will be there. as part of the service that you can render. Then above all, you are going to include a presentation about what your firm is all about, or how you go about the engagement. All of this will be accompanying the what? The tender document, which should be what? Which should be submitted to the prospective client office. That is the second stage completed. The third stage is outside your control. It's at this stage that after the tender process, the tendering date has lapsed. That is, you have the tendering date, the date of submission has passed or is closed. Now, the prospective client will now decide to schedule a date, okay, where all the tenders from the audit firm will be opened and analyzed and evaluated. So, in looking at those documents, these are the things that will be of importance to them. These are the things that they are going to consider when looking at your tender document. The first thing they are going to consider is the audit fee. That's the number one thing that they are going to consider. How much does this audit firm charge for this kind of service? Audit fee is number one they are going to consider. Number two, they also want to look at what are the services, what other services can the firm provide for them aside from that particular service. Number three, that will be of interest to them is what is the geographical location and coverage of the audit firm's offices. That is where the Big Four, we have an edge over other audit firms here, because the Big Four are located in all the countries of the world. The small audit firms, some of them, they are just located in one city. So that will give an edge to the Big Four in this instance. Then another thing I'm going to consider is the expertise of the firm and the staff. They want to know that who are the key audit partner in the audit firm. They're going to review their portfolio. Okay. Then they look at the reputation of the audit firm. How long has this audit firm been in existence? Has there been any scandal about this audit firm? When they are done with all of this, they are now going to ask the prospective audit firm to come and make presentation. Now, one thing you need to note here is that sometimes you might have prepared a very good document, but when it comes to you to come forward and defend what you have prepared, it becomes problematic. It becomes challenging. So at this point of presentation, the prospective client is looking out for what? Confidence, boldness from the audit firm to know that, oh, depending on whatever pressure, this audit firm can deliver. So when all of that are done, this is it here. Formal presentation is served by the audit firm. When all of these are done, they will now decide on which audit firm will be more preferable. They will look at the ones that they can cooperate, that will cooperate with them. The one that is, so from the presentation, when they start asking questions, they will know whether this audit firm can work with them. Okay? So when that has been done, they will now select the audit firm amongst the ones that have submitted or indicated what interest. That is the process for tendering. I hope that is clear. Does anybody have any question, any comment, any observation? Please ask your questions. Questions, comment, observation? Any question? Are we good to go? Can you hear me?
Yes, sir.
Any question on this? We are all good, right? Then that takes us to the next one, low balling. Now, low balling, like I said, is a practice that is common with the audit and assurance firms. What is low balling? Low balling is a practice of tendering for audit work at a lower fee with the objective of winning the audit. If it is successful in obtaining the audit, the firm will hope that it will be able to raise the audit fee in future years, or it will be able to recover losses on the audit fee by providing other more lucrative non-audit services. So what does it mean? So like I said, it's a common practice with audit firms or amongst the audit firm. What does it mean? So in that instance, let's say you have like 4 audit firms that have indicated interest through the tendering process. You have the PwC, you have KPMG, you have the S and Young, and you have a small medium audit firm, Adia & Co, Chartered Accountant. Now, using low burden as an example. Now, after the tendering process, remember we look at when they have reviewed the tender, they start with the what? Audit fee. So before Adia & Co, Chartered Accountant, submitted their tendering document, they envisaged that there will be some big audit firms that will also be in competition with them. And you know that if they put their fee at the same rate as the big 4, they don't stand a chance. So what did they do? They have envisaged, as I said here, looking at this question, when you are answering when you in the first instance, in the initial consideration, we said it here. Could it or should it offer to do the audit for a lower fee than other firms are likely to quote? It's already in that question. That's your initial question, initial consideration, okay? So what we are saying here is that you knew that there are going to be other big audit firms there. So you deliberately or intentionally reduce your audit fee because you know that the client will focus on the audit fee first. So the other big 4, S and Young, KPMG, and PwC, they charge 30 million naira for that particular engagement. But you, in that proposed audit fee, but you, Adia & Co, Chartered Accountant, you charge 15 million naira as audit fee. That alone will be of interest to the prospective client. All these people are charging, this person is charging 15 million. Are you sure this person can do the work? And when the time for presentation came, you're able to impress the prospective client. And at the end of the day, either for the audits to be given to any of the big 4, the management of that prospective client decide to give it to your audit firm. Adia & Co, Chartered Accountant was the one that was the preferred audit firm. You got it, and you are paid 15 million naira after the engagement. Now, considering the confidence that the management they have in the kind of service that you have rendered to them, they were impressed. They said that, okay, we also saw that you could render some other services. Can you help us with our tax management and tax planning? You said yes. Now remember, you have lost opportunity cost. You have lost how much before? 15 million naira. Now, opportunity has come again for you to do what? Redeem or recoup that money that you have lost, your opportunity cost. What did you now do? So yes, I can do it for now. How much can you charge for that kind of service? You now charge them how much? 30 million. After negotiation, it comes down to what? 25 million. So indirectly or directly, you have gained the 50 million naira that you have already charged initially. And that means that the tax planning, tax management and tax planning service is 10 million. But you have leverage on that by quoting what? 25 million, which is now what was acceptable to them. So in a way, you have not lost anything. You have gained, you have recouped the money that you thought you had earlier lost. And that does not mean that in doing that, performing that engagement, your engagement will be of low quality. No. Whether you reduce your fee, it has not been proven that it leads to poor audit work. You still need to do the same as though you are doing it for the higher fee as earlier proposed. You understand? But you are just doing it knowing fully well that you are going to recoup the balance or the money somehow later on in the future. All right? So that is what lowballing is. Now, Madam Momolara, I hear you. Ask your question, madam.
Yes, sir. Yes, sir. Sorry, I really do not get the low balling.
What did you not get there? What did you get from what I said earlier?
Do you mean that? Okay. Do you mean that I'll reduce my fee so that they can believe in that the part I reduced for the clients, I can always gain it back when they give me other things to do? Is that the meaning?
Exactly. That is it. That's the meaning, madam.
Okay. All right. Thank you.
That's why I asked that question. What did you get from my explanation? That is what it.
Hello, sir.
Yes, I'm with you, sir.
Yes, sir. My question is there any specific requirement for listed companies on the type of auditors they should engage, whether among the big four or the
Actually,
medium-sized audit firm? Is there any specific listing requirement by listed companies?
So for listed entity, right, or listed companies,
Yes.
there is no particular what do you mean, audit firm or this requirement for the type of auditors they need to get. But what always comes to play is that because the PLC company means that they are already big, then that means that they might have investors outside Nigeria, right? And they know that the investors outside Nigeria will be more comfortable with audit firms that are what? That are also big or that have presence in their own country. So they always prefer the PLC company always prefer to use the big four. But there is no law that says that they must use the big four. But it's just that for the nature of the business they run, like Dangote now, Dangote, it might be audited by any of the big four. Why? Because it's a PLC. All right. MRS also can also what's that one that make the other guy? It's MRS now. MRS also can be audited. That is can be audited by. I'm talking about BUA Group now, not even MRS. BUA Group, because BUA Group, MRS is under BUA Group, right? So BUA Group also, because they have investors outside Nigeria, they are likely also to be audited by the any of the big four. So it's because of the nature of their investors that will make them to change. Another thing can also make them to change, to wanting to use those big four. Will also be some investors in the organization. If you have a foreign investor that has enjoyed the service of KPMG, if they are using PwC before he invested, and he has a significant influence on the management, on the board, he can decide to say that I'm not comfortable with KPMG. I want to use PwC. You understand what I'm saying? So these are some of the areas that are likely to influence the nature of the audit firm a PLC company will use at the end of the day. Have I been able to answer your question, Mr. Usman?
Yes, sir. It's noted, sir. Thank you, sir.
All right. So this other aspect, agreeing the terms of engagement, ISA 210, the objective of the audit engagement letter. Now, this one, what this one is saying here is that before the engagement letter is signed, right, there are certain discussions that happen at the back end between the auditor and the client management. Now, it is the fallout of this discussion or decision or meeting that will now lead to whether the engagement letter will be signed by the auditor, will be sent to the client, okay, to sign, or they are going to discontinue from such engagement. It's the fallout of that discussion or meeting that's going to influence that. So what we normally see is that we just hear that letter of engagement has been signed and the engagement has commenced. That we normally see. But this particular aspect that we are discussing now, you don't get to see it is behind the scene. For those of us that watch movies, there's what we call BTS, behind the scene. For instance, when they acted this film, Titanic, we saw the Titanic ship that wrecked in 2012. That ship wrecked in 2012. We saw the ship what? Divided into two. When you go to the behind the scene, you'll see that it's just what? Effect. Effect from what? From the producers of that film. That film was made in a swimming pool. Nobody died. All those things that they put there are just effect. That's behind the scene. But you don't get to see the behind the scene. What you normally see is the movie. If you are going to see behind the scene, I'm telling you, most of us will not have a good memory of that Titanic movie. That movie fake. But if you have watched behind the scene, you say, this movie is not interesting. But because we don't see behind the scene, we only watch the movie. So many people cried after watching the movie. The same thing you're talking about in this particular instance now. So what you normally see is when the auditor and the client, they sign off the what? Letter of engagement. Okay? But what you don't get to see is what are those conditions that they must be fulfilled, fulfilled before the letter of engagement is signed by the client. That is what we want to talk about now. I hope that is clear. That's why I talk about agreeing the terms of audit engagement, ISA 210, the objective of the engagement letter. That's what we are talking about here. So before the engagement letter is signed by the client, a meeting is usually scheduled between the client and the audit firm. And they have to agree on these conditions, these terms and conditions. If they agree on these terms and conditions, it will lead to the letter of engagement being sent to the client for what? For signing. Some of what they are going to have in that discussion, we call it preconditions, right? They're going to discuss about whether there's a common understanding between the auditor and the management. They have an understanding of what the engagement is all about. They're going to talk about whether they are going to use established financial reporting framework in preparation of the financial statement. Are they going to use IFRS or they are going to use another one? That must be agreed before the engagement, letter of engagement is what is signed. Also, they have to also obtain an agreement from the management that it acknowledges and understands its responsibility. That is, the management has what? Responsibility number one. That is the management responsibility that they are going to prepare what? The financial statement. That is also the management responsibility that they are going to ensure that internal control is what? Is efficient and effective within the what? Or within the business environment or client business environment. Now, they're also going to agree that the manager will provide the auditor with all relevant and requested information and unrestricted access to all personnel. Okay? And also, if all of what I explained earlier cannot be agreed with the client, then the auditor will need to also ask them also, is there any limitation on the scope by the management? Does management have any limitation? That is, there are some areas that the auditor will not look at that's going to impact on the audit engagement. They have to have that understanding. So if there is a limitation on the scope, or if they are not going to use the appropriate financial reporting framework, or if the management decides to not to agree to the responsibilities, at that point, the audit firm can decline the what? The offer. That is what they say here. The auditor or the audit firm can do what? Can what? Can decline, can refuse the engagement, can decline the engagement. If there's a limitation where the financial reporting framework that they're going to use is not acceptable, or where the management refuse to agree to their responsibilities. So that means it will be what? It will be discontinued. So that is what this aspect is all about. Are we clear, or does anyone have any question on this area? Any question? Are we good? Can we proceed? Please respond, though. Can we proceed? Please respond.
Sir, this limitation of scope is one area where the examiner tend to come out with very tricky questions in a case study. Now, ordinarily, when we are talking about statutory audits, will there be any reason why an audit client will invite you to come and edit his books and to express an opinion and then impose limitations on areas where you cannot touch during the course of the audit? I just want to know whether this is possible in practice, sir.
So what happened is this. In practice, so many things are possible, right? But what normally happens when there are areas that are not supposed to be touched by the auditor in the course of the engagement, the auditor should request for what? A written representation, or we call it letter of representation. That letter of representation or a written representation will suffice that, oh, the auditor is aware that it's supposed to cover this area. The auditor is supposed to cover this area, but management has declined or has not allowed the auditor to look at that area. So it becomes a limitation of scope to the auditor, but in a way, it's been able to obtain a letter of representation that, yes, we are aware that the auditor is supposed to look at this area, but because of certain peculiarity, we don't want the auditor to look at that area. A good example is the area that has to do with directors and emoluments for most of those PLCs. Okay, you want to do statutory audit, that aspect is usually very difficult to get the true information about directors and emoluments. How much is a director entitled to? What are the allowances? What are other benefits that the director enjoys? This particular area are areas that usually poses challenge to the audit firm when they go for the audit. So what they normally request for in that instance is to request for what? A written representation or a letter of representation in that regard, so that in case there's any exposure or litigation in future, they're able to present that written representation, even though it's a weak form of audit evidence, but at a glance or for a start, it shows that the auditor knows what he's doing when they go for such audit. So, Mr. Osman, I hope I'm able to answer your question.
Yes, sir. Yes, thank you for the clarification, sir. But my real question is, that in itself, that imposition of areas of restriction in itself, is it not going to limit what the audit is, the purpose of the audit? Is it not going to reduce I'm trying to use the right word. Is it not going to reduce?
Qualify the audit report.
Yes.
You can need qualification of audit report. You can. Because when you get to chapter 14, when we're looking at audit report, you will see where I talk about limitation of scope. So when there's a limitation of scope, and that area that has not been allowed the auditor to work on could pose a serious risk to the auditor or the audit firm. So eventually what they are going to do is to issue a qualified audit opinion, okay, that is based on that area, because for qualification of audits to occur, it can only be on two areas: when there's a limitation of scope and when there's a material misstatement. So it could be a grant for qualification of audit reports, sir.
Okay. Thank you, sir.
All right. Are there any other questions? So we go to the next area, content of the engagement letter. Now, engagement letter, like I said, is a letter that is signed after. So this is the process. So there is a tendering process, right? Which I just explained. After you have been nominated, you have accepted to be the auditor. You're not going to have a meeting with them. After that meeting, they talk about you to agree on the terms and conditions of the engagement. If they are fine with all your conditions that you have put forward, they agree to cooperate, they agree to do all of those things. It is at that time you are now going to issue them the engagement letter. That is, they are now mandated, they are now bound by what? By the agreement. It becomes what? An agreement between the auditor and the client. So the letter of engagement is issued when the engagement is about to what? To commence. So in the letter of engagement, these are some of the primary information. It's not exhaustive. Primary information that is contained in the letter of engagement. Number one, you always have the objective and scope of the audit. It must be contained in letter of engagement. Number two, the responsibilities of the auditor must also be contained in letter of engagement. What are the responsibilities of the auditor? The main responsibility of the auditor is to ensure that financial statements are prepared in line with applicable financial regulatory framework. That's the main purpose of the main responsibility of the auditor. Okay? Then the responsibilities of the management must also be what? Must also be contained expressly in that letter. So some of the main responsibilities of the management include to prepare the financial statements in line with applicable financial regulatory framework. Number two is to ensure that there is an effective and efficient internal control system. And they are also responsible for the prevention and detection of fraud. And they are also responsible for presenting and providing all necessary information that will make the audit to be what? To be seamless. And lastly, they are going to allow unrestricted access to the auditor to all information and persons responsible for the preparation of the audit. All of this must be contained in letter of engagement. You also need to have identification of underlying financial reporting framework, that is, financial statement that is being reported is prepared using what? IFRS. That must be stated. And if there's any report from the previous engagement, which obviously they need to look at the previous working paper of the engagement, right? So you need to make reference to them when there is a need. Mr. Moses Abiono, I'm with you, sir. Mr. Moses, that's your question, sir. Mr. Moses.
Yes, can you hear me, sir?
Please ask your question.
Can you hear me, sir?
Loud and clear. Please continue.
Okay. Sir, in the area of engagement letter, probably if you have an auditor who you have engaged for years, probably like 4 or 5 years.
Yes.
Is the engagement letter be issued to you on a yearly basis anytime they come for an audit?
That is the best practice. The reason is that there might have been some changes in the client's business. So if you don't change it, if you don't review the letter of engagement on a yearly basis, you're not able to cater for those areas if they had occurred. For instance, when you started the audit, your client's business is located in Lagos majorly, and that is where your audit firm is also located. But within the first year and the 5th year, they have expanded to other parts of the country, like in the northern part, they are now in Kano. They have a branch in Kano, they have a branch in Port Harcourt. So if, as an audit firm, you are aware that the business has expanded to this point, and you don't have the resource or resources to conduct the audit in these areas because of the timing of the audit, you might need to let your clients know that because of this expansion, you don't have resources to continue with such an engagement. So you advise them to get another audit firm. But if you don't review the letter of engagement on a yearly basis, you will conclude, or you have the understanding that you are still auditing, even though, yes, you are looking at financial statements, it's going to show that they have branches in all those places, but you will not have been able to factor in these areas. For instance, because of this expansion, let's say you have the resources to even to go to those other locations. If you are not reviewing the letter of engagement, you cannot increase your audit fee. That means the audit fee that you have agreed in year 1, knowing fully well that inflation would have affected, would have impacted the audit fee for 4 years. If you are not reviewed the audit, if you are not reviewed the letter of engagement for 4 years, that means that what you are getting as the audit fee has already been what? Has already suffered inflation. So that is these are the reasons why you need to review your letter of engagement annually. I hope I'm able to answer your question, Mr. Moses.
Yes, thank you. And again, please, sorry. Whose responsibility to draft the engagement letter? That's number 1. And again, in the course of the class, I don't know if you have explained anything relating to letter of representation, sir.
No, letter of representation will be discussed in chapter 8 under audit evidence. We're going to talk extensively on letter of representation in chapter 8. That is where you have it in the syllabus.
All right, sir.
So,
All right, sir.
so for the letter of engagement, like I said, after the audit firm has accepted the offer that they will now become, after the tendering process, they have been selected as the preferred audit firm after the tendering process. That means that they will be given a letter that you have been accepted as, you have been appointed as our auditor. Now, after that letter of appointment, then the audit firm will write the letter of engagement and present it to the client to sign. Once the client sign off, it becomes a binding legal document. That is the process. Hope I'm able to answer your question, Mr. Moses.
Yeah, thank you, sir.
All right, you're welcome. So with that, we are done with chapter 6. All right?
Sir.
No, chapter 5. No, chapter 5. Yes, I'm with you.
Hello, sir. Yes,
Please
sir.
go ahead.
Yes, yes. While we are still discussing the content of the letter of engagement, I just want to know whether key audit matters that arose during the course of the previous audit is supposed to also be contained in the letter of engagement.
Okay. Now, key audit matter. No need to digress. Key audit matter, we are going to look at this in chapter 14 under reporting. However, to answer your question, what are key audit matter? Now, key audit matter are matters based on the professional judgment of the auditor are believed to be what? They are very critical to the audit that is being performed in the year under review. That is key audit. That is key audit matter. Now, those key audit matter from previous engagement would have been considered because the auditor would have obtained the previous year audit documentation from whether the previous auditor or if they are the one that did it last year, it needs to have incorporated that findings from the key audit matter. But like I said, key audit matter is usually occur in the year under review. So if the key audit matter has not been discussed in the previous year, you cannot bring it to this year because it's supposed to be something that's supposed to occur in the year under review, that year that you are reviewing. If you are reviewing the financial statement of 2025 and you have key audit matter for 2024, you cannot bring it to 2025. It's supposed to have been discussed, reported in 2024 audited financial statement, not in 2025 audited financial statement, because it's supposed to occur in the year, it's supposed to be reported in the year under review. So that is the position, sir.
Thank you, sir.
All right. Any other question? We are good, right? So let's go to a question that relates to what we have discussed. All right. So I'm going to stop sharing and share a question on that. Okay. So I hope you can see my screen. Okay. I'm not sure. I've not shared it, right? Okay, let me share now. So can you see my screen? Please, can you all see my screen? Can you see question 6?
Yes, sir, we can see your screen.
You can see question 6, right?
Yes, sir.
Okay. So that question 6 is from this year. Let me show us. It's from May 2024. Question number 6. May 2024. Question number 6 is where we want to look at now. Now let's read it together. Now, I've always said it and I'll say it again. When you have a question like this that you want to try in examination, you need to read the case study like 2 times. Number 1, the first reading, very fast. That should not be more than 3 minutes. Second reading, slow reading. That should not be more than 7 or 10 minutes. Then, at the first reading and second reading, you don't go to the questions. Why? So that you don't have your mind just looking out for those answers to those questions. You must have an understanding of what the case study is all about, because sometimes the questions are inferred. You might not, they are deduced. They are not on the case study. You need to, from your understanding, you need to think outside the box and provide answers to those case studies. That's one of the reasons why I said that you don't read the questions. After you have read it the first and second time, the third time you are reading it now. When you are done with the reading, you are reading with the questions. With that, you need to have a good understanding of what the requirements of the questions entail. Okay, so let's read it together. This is question number 6, May 2024. Audit, advanced audit and assurance. Now, the partners of a number of small firms, some of whom act as alternate firms to each other, were considering the outcome of some reviews by the Financial Reporting Council on some of the financial statements the firms prepared. These reviews showed significant lapses in the works they carried out and compliance failure of some appropriate standard. Some other practitioners amongst them also raised concerns about their failure to meet most of the monitoring guidelines issued by the Professional Practice Monitoring Committee of the Institute. Based on this, it has become imperative that something has to be done urgently to save them from further sanctions and possible litigation. The partners of these small firms have consulted, sought, and obtained approval of your firm to train them on requirements of relevant regulatory bodies as part of your firm's contribution to the accountancy profession in general, and in recognition of your firm as one of the reputable big firms. Your partner has directed that you prepare and make a presentation to help improve their service delivery standard. Now, let me try and explain what this thing is all about. So you have some small audit firms that have not been complying with the guidelines of the institute as monitored by the Professional Practice Monitoring Committee. Now, this Professional Practice Committee is that committee that is set up by the institute, that's made up of experienced experienced auditors, external auditors, that go around all the audit firms in Nigeria and check their conformity with the guidelines laid down for the system of quality management amongst the audit firm in Nigeria. So that's the background. So they knew that some of their engagement did not follow the laid down procedures and rules by the institute. And if they don't follow, they are likely to be sanctioned or even to get some litigations from the client or from the institute. So as a preventive measure, they now approach your audit firm, which is one of the big four or the big audit firms, to help them, to educate them, enlighten them on how they can improve on their service delivery to their client. That is the summary of it. Okay. Now, that's it. I prepare an outline for a paper that will be used to address these practitioners on the following: the consequences of actions that could arise as a result of poor quality professional service delivery. Down is 3 marks. Secondly, the responsibilities of key quality control matters placed on the engagement partner in accordance with ISA 220 for an audit of financial statements. Those are the questions, right? It will carry what? 15 marks. We have discussed all of these things in class last week when we look at this, when we started this particular chapter. I believe all of us can answer this question. But let's look at how it's being prepared for exam purpose. And I'm going to tell you if the presentation is okay or not. Because like I said, it's not all the time that the suggested solutions are usually correct. If it's not correct, I will let you know. If it's correct, I will let you know. So let's go to the solution so as to save time. All right? So we are going to question number 6. We are going to question number 6. So for number 6, this is what you're asked to do. The consequences and actions that could arise as a result of poor quality professional service delivery could be any of the following. You can see. As you can see here, you can see they did not make mention of quality, system of quality management or quality control. So that could be, it could be intentional, so that students will not be able to think along quality, system of quality management. What did they use here? Poor quality professional service delivery. That's what they use there. It's the same thing as what? Poor system of quality management. It's the same. But you can see the way they presented it now. So if it's somebody that is dogmatic, that is always one-line thinker or one-way traffic, you don't need to answer this question. Say that this question, nobody has taught me this thing in class. Whereas you have been taught. Is the way they have presented the question that has confused the student. You have been taught. So that's why I said that as an ICAN student, you need to be able to think outside the box. Don't be narrow-minded. For instance, if you have read this question before you went to the case study to answer, I'm telling you, you'll not be able to answer this question. You'll not be able to attempt it. Because you're looking out for poor quality service delivery. That's what you're looking out for. And what you have in that thing is what? Quality control or system of quality management is what you have there. So you are going to be confused. You might spend the next 30 minutes trying to unravel what the requirement of this question is. And time is what? Ticking away. That's why I always say that for students, it's advisable to read and understand the case study before you go to the questions. It's highly needed. Let's look at it. You can see that is what we have discussed already in class. They're talking about challenges that are likely to face the audit firm when they don't comply with what? System of quality management. Number 1, legal action and legal cost will increase, which I have discussed. Number 2, loss of client, because the more the client are dissatisfied, the more they are going to leave the work. They are going to discontinue the service of the audit firm. Number 3, adverse publicity and damage to the reputation of the audit firm, because when they leave, they're going to tell it to other people. You know that bad news spread faster than good news. Once something is bad, it spread faster than good news. So that's what we mean by adverse publicity. Then, with all of this, when it gets to the hearing of the institute, they are going to summon the management of the audit firm, and there will be disciplinary actions that will be meted out after they found the investigations to be true. That is the A part. The B part of the question is this. ISA 220, pays responsibility of key quality control. Now, remember, you are talking about system of quality management now, 2026, based on the syllabus. This is for 2024. As of 2024, you are still using quality control. In 2026, you are using system of quality management. Please note that. All right? So, responsibility for key quality control matters on the engagement partner. The engagement partner has responsibility for the overall quality of the audit and is required to put procedures in place to ensure all of these are what they still maintain it. The thing that has changed here is that they have changed this to system of quality management and not quality control. All of these things are still there. And also they have also changed some of these things because now you have 8, more like 8 responsibilities that the engagement partner must do. Before it used to be 6 or 7. So what I mean here, this one is still there. You must ensure that ethical standards are complied with. What are ethical standards? Independence, objectivity, conflict of interest, all of those things, they abide by it. Number 2, they must ensure that independence requirements are met, that is identifying circumstances and relationships that might give rise to threat to independence. All those familiarity threat, intimidation threat, advocacy threat, self-interest threat, self-review threat, all of that will be there, right? Then the next thing there, under independence, assessing the impact of breaches of the firm's independence policies and procedures, and whether such breaches create a threat to independence. Then taking suitable actions to eliminate identified threats or to withdraw from the engagement if appropriate. We have talked about all of these in last week when we met, the last time that we met. He also responds to ensure that procedures are in place to deal with acceptance of new engagement and continuance of existing engagement. He must ensure he manages that area. Okay. Then next also, he must ensure that the audit is carried out by an audit team with appropriate competence and work capabilities, because it's one that's going to choose the engagement team. Then he must choose them based on what? Competence and what? Capability. They must also ensure that appropriate management of the engagement is in place, including direction and supervision of the staff and the review of auditor. That's why I said that the engagement partner will not be there throughout, but he must establish a system of what? Supervision and direction of each engagement team to be able to be sure that everything is still in line. You must have that system in place to coordinate that area. They must also ensure that where there is disagreement or difference in opinion, adequate consultation has taken place on difficult and contentious matters, and the conclusions from such consultations implemented. So between the engagement partner and the engagement quality reviewer, there could be some contentious matters. They must embark on what? Wide consultation. And whatever they have agreed to do must be what? Implemented. Must also ensure that they have an appropriate monitoring system in place. Then the following matters are to be documented: issues in respect of compliance with ethical requirements and how they were resolved must be what? Must be documented. Okay. Conclusions on compliance with independence requirements, conclusions in respect of new and continued engagement must also be documented. The nature and scope of the conclusion from consultation and consultation undertaking must also be documented. Now, for audit of listed companies and public interest entities and any other audit where the firm has determined that an engagement quality reviewer or engagement quality review is required, and engagement partner is also required to appoint an engagement quality reviewer. You can see I'm choosing my words carefully. It will not be engagement quality control when you are doing for 2026. It will be engagement quality reviewer, okay, who performs an objective evaluation of the significance of judgment made by the audit team and the conclusions reached, including discussions on significant matters with the engagement partner, review of financial statements and the proposed audit report, review of selected audit documentation relating to significant judgment, an evaluation of the conclusions reached and whether the appropriate audit report is appropriate. Then due consultation is given to the engagement team evaluation of the firm's independence in relation to the audit engagement. It's also responsible for due consideration is made whether appropriate consultation has taken place on difficult and contentious matters. Then lastly, you must ensure that due considerations whether audit documentation selected for review reflect the work performed and the conclusions reached. All of this and much more were discussed in the previous class. So just go back to your recording or go back to the area that has to do with the ISA 220 that we discussed about the engagement partner. All of those responsibilities are what the engagement partner needs to ensure are carried out. Okay, so always look at the report of the examiner. It says that the question tests knowledge of quality control. We are talking about system of quality management now in audit work and ISA 220. About 90% of the students attempted this question and the performance was above average, as most of them demonstrated good understanding of the question. The honest pitfall of the students was their inability to explain quality control matters as per this for the audit of financial statements. Candidates are advised to pay close attention to the requirements of the question, to study the institute study text and pathfinders, which are readily available on the institute's website when preparing for future examinations. So you can see that this particular question is something related to what we have done in the class. But what is different now is that what we are doing now will be in line with the revised ISA 220, ISA 220, not this one. If you use this one, there are some points that you will not be able to explain. So you go back to that particular aspect and review what the engagement partner is supposed to do. And with that, you're able to get your full mark in that question. So if you go to, that's the answer, and this answer is apt for me, is correct as far as that particular question is concerned for that year. But for 2026, you have to answer like this without making cognizance. Like for instance now, if you answer the question in 2026, May, you have to put in ISA 220 revised. You don't just put ISA 220, you have to put ISA 220 revised, but it has been revised. So you go and put ISA 220 without putting revised there, the examiner will penalize you. So you must be what? ISA 220 revised. That's what you should put there. That will make the examiner to know that you have read the revised version of that standard, and that's what you have applied in answering this question. So that's why I say that as a student of ICAN writing advanced audit assurance and forensic, you have to be intentional when you are writing your answer. You have to be what? Intentional. Show that you know what you are saying or what you are writing. So don't just copy and paste. In 2026, this standard has been changed to ISA 220 revised. You don't go and put ISA 220 like that. You don't put revised there. The examiner will tend to believe that you are still using the old version of that standard. So it's going to, the students, some students will lose some marks. Okay? So these are some of the areas that you have to pay close attention. If you lose 1 mark in one area, use 3 marks in another area, at the end of the day, you're not even sure of having 100 in the first instance or 50, and you have lost like 20 marks. So how will such student pass audit? So these are some of the areas that you need to focus on and be sure that you don't find yourself in this in that position. All right. Any question on this? Any question on this particular area? So my advice to us is to practice more questions and be intentional when you're answering the question. And luckily, this class, this lecture is recorded. It will be shared with you. You can always go back to it. Particularly some of the advice I've given on how to answer this question. You can always go back to it and implement it, and you see how your performance in this May diet will become very successful. So by this time, I mean, by the time the result comes out, you'll be the ones that will be calling and say, you put it on the chat that, oh, thank God for this class. I'm now an ACE, like that. So everybody will be happy for us, okay? So does anyone have any question on this area that we have discussed? Questions, comments? Are we still there? Anybody? Somebody? We are all good, right? What we just discussed is May 2024, question number 6. All right, that's what we just discussed. There's another one here also that still talks about that particular chapter that we have talked about. That is question number 2 of May 2024, question number 2. Now look at it. We have always said that there's no calculation in audit, right? We always say that. And I'm still saying it. As far as AAAF is concerned, you don't go to the exam with calculator in Nigeria. Okay, for now. So what this question is, how does this question relate to what we want to discuss? We are only going to look at the aspect that relates to what we are discussing. And that is the only part. This particular one. Evaluate the different types of audit review and the purpose and scope of the review. We have looked at that in the last class. Types of what? Audit review. We have peer review. We have auth review. We have code review. And we have engagement quality review. Okay? I am going to explain them, purpose for each of them. So let's go to the answer. I've explained it. Let's go to the answer so that we'll see if we are on the same page. Look at it here. You can see peer review. You can see, as at 2024, it was still called Engagement Quality Control Review. But now you're going to answer it. You're not going to put control. There's going to be Engagement Quality Review. You have audit review and you have monitoring review. And you talk about how the purpose of those audits. The purpose of audit review is to check whether the audit work has been carried out to proper professional standard. The objective of the audit has been achieved, and the work carried out during the audit and the audit evidence are suitably documented, and the audit evidence support the conclusions that have been reached. The review of the audit work should cover the audit planning process, the audit procedures, including documentation, the audit test, compliance with audit work program, and resolutions of problems encountered in the audit. The review of audit work should also cover whether the conclusions reached is consistent with the audit evidence obtained and documented. That is the area that talks about what we have discussed, chapter 5. All right. Any question? Any comments? Any observation? So we are done with chapter 5. So we need to go back to the Pathfinder, and look at more other questions that has to do with practice management that we have discussed. Okay, are we good to go? So we'll not be able to finish this chapter, but we are going to that chapter now. We are going to the next chapter. Chapter 7 is what we are discussing next, right? And that will be handled by, that is being handled by me. Chapter 6, the one for chapter 6, audit approach, will be handled by the second facilitator. All right? So we are going to go to that chapter 7 now. I'm going to start it, but we are going to continue from there next class. But we are going to start. We are going to do it till the time lapse for today. All right? But I need to let you know that that's what we are going to. We're not be able to finish it. This is chapter 7. We are looking at audit planning. All right? Audit planning is the step you take after you have been able to conclude on the audit approach. Once you need to conclude on the type of audit approach that you want to deploy for a particular engagement, the next one you need to do is to plan the audit. All right. Now, in planning the audit, any question? Does anybody have any question? Madam Molara, question? Any question, Madam Molara? Any question? Madam Molara, question? Okay, I think she's fine. So that is when planning starts. So planning is the first stage in an audit engagement cycle. Planning is the first stage during the engagement cycle. The engagement cycle is a cycle that contains all the processes that must be carried out before the audit report is issued. Audit engagement cycle is the cycle that details all the processes that must be completed before the audit report is issued. So in the audit engagement cycle, you start with audit planning, you go to gathering of audit evidence, you go to evaluation and review of audit evidence, then lastly, you talk about reporting. It's after you have looked at reporting and you are fine, and you are now able to issue the audit report. All right, so that is the audit engagement cycle. So the planning process, like I said, starts with that audit approach, right? After you have concluded on the type of approach or strategy you want to use for that engagement, you have to draw up your plan. So the audit plan, the relevant standard that explains audit plan is what? ISA 200. Okay? ISA 200 is talking about overall objective of an independent auditor and the conduct of audit in accordance with international standard on auditing. That's what ISA 200 is all about. Okay? So ISA 200 also explains that as an auditor, you must achieve this objective during the planning. You must achieve what? This objective. Number one, you must obtain reasonable assurance that you must obtain reasonable assurance whether the financial statements have been prepared in line with applicable financial regulatory framework that is devoid of what? Fraud, material misstatement, fraud, or error. That's number one. Number two, you must ensure that the report of the financial statement and communicate as required by the ISA in accordance with the audit findings. That is, you must be able to achieve the report that the audit report is issued and is shared or is communicated to the appropriate intended users. Okay. Now, where the auditor is unable to obtain usable assurance, a qualified opinion is insufficient. The auditor must disclaim an opinion or resign. Who is not able to obtain reasonable level of assurance, he must issue what? A qualified opinion. Okay? And that qualified opinion, if he's not able to issue a qualified opinion, then he must do what? He must resign from such engagement. So still on ISA 200, that standard say explains that the auditor is required to comply with all ISA relevant to the audit. Ensure that they comply with all the international standards on auditing. Not all the auditing standards are needed for every engagement. What we are saying is that for that particular engagement, for instance, if you have a client that does not involve in foreign exchange, does not buy, it does not import, does not trade in dollars or forex, you cannot apply. You cannot when auditing, you don't need to apply the the IAS 21 for such clients. That's what we are trying to say, okay? Or if the clients you are auditing, if it's not a group company, it's not a group of company, it's just a company. When I say you want now to apply ISA 600 and talks about group audit, it will not be applicable. Do you understand? They must comply with all relevant ethical requirements, okay? That is all the ethical requirements, independence, objectivity, and the likes. They must plan and perform the audit with professional skepticism. Must plan and perform the audit with professional skepticism. What do we mean? That is, must have in mind that you must have a probing mind, be able to ask questions, and be sure that whatever is being presented is something that is what? That is justifiable to what is needed. For instance, you ask for A, B, C, they gave you C, D, C, and D. That is not the same. You need to tell them that I want A and B, not B and not C and D. That's what we mean by what? Having an attitude of professional skepticism. You must have a probing mind to every evidence that is being provided, be able to critique it, ask questions. Okay? Then the auditor is also required to exercise professional judgment in planning and performing the audit. Based on the experience he has gathered over the years, he must be able to exercise professional judgment in planning and performing the audit based on the experience he has acquired over the years. Okay? Next, also, he was able to obtain sufficient and appropriate audit evidence to allow him to obtain reasonable assurance. Documentary evidence is very key in audit. He was able to obtain sufficient and appropriate audit evidence is very, very key in audit, okay? Now, the planning cycle, right? The planning cycle starts with what? When I say this is the initial stage of the audit engagement. So it begins after you have signed off on the letter of engagement, all right? So when the final audit is completed, planning for the next audit cycle will commence, either at the interim stage, that is taking into account relevant audit findings from previous audit cycle, e.g. result of testing controls, particular difficulties in carrying out the test, suggestions for improvement in testing effectiveness and efficiency. So the planning cycle, you have to start. Immediately you are done with the last one, you have to initiate the next cycle. You have to set that one in rolling. Because like I said, you don't wait till the end of the year before you now start your planning. Otherwise, you won't be able to meet up. You must, in some organization, inside you're auditing a bank, now you not say wait till the end of before you start the audit. You will have started with what? At the interim stage, come and look at, perform some tests, audit tests. get the results, then come back at the end of, and you do that in the middle of the year. Then at the end of the year, you can now conclude or finalize on the audit. That will have saved you a lot of time. And for you to leave everything till the end of the year, that will be too much for the team to handle within the short time that is available. Okay. Then one thing you also need to note here is that if there has been any changes in the business from the last audit, you need to also look at it during the planning stage. There are times maybe the business has changed. For instance, if they have closed down some of their branches or they have expanded some of their branches, you need to let us know, because that needs to be factored into the audit plan. Because in some instances, you might need to visit some of those locations in the course of the audit. You understand what you are saying? All right. Then you must be able to also ensure that the interim audit result will affect year-end or final audit procedure. What we are saying here is that you must have performed for some clients that are very big. You might need to perform interim audit for them before you come for the final audit at the end of the year. All right. Then you must also identify audit procedure that may be more efficient and effective at or before the year end. Like I said, you need to do some, for instance, you might need for the year end, or by year you must have done the end of year stock count or end of year cash count. Okay? Or sometimes you might need to also circularize some of your debtors, your customers. Okay? All of these are done. In the course of the interim also, you might need to also carry out some asset verification. Okay, so that it reduces the time you are going to spend during the audit. All right. Then at each stage of the audit, you must reassess the audit strategy. The audit strategy, the audit plan is not static. Please note this. The audit plan is not static. It can change. In fact, it continues to change until when the audit is completed. That is when the audit plan will cease to change. While the audit is still going on, the audit plan can still what? Can still change. Please always have at the back of your mind. The audit plan keeps changing until when the audit engagement is completed. That is when the audit plan stops changing. But while the engagement is still on, the audit plan can change. The audit strategy also can change. Please always note this, okay? So some of the planning activities include, number one, initial evaluation of the ability to continue to carry out the audit. That's why I talk about Mr. Moses that asked a question that time, that letter of engagement, should it be reviewed every year? This is one of the reasons. Because you audited your client last year, there's only that you'll be able to audit them this year. If the business has changed, you need to evaluate this. Number two, you need to consider the effect of a modified audit report, management letters, and point forward to the attention of the appropriate, that is, you must look at the effect of some of these things. The modified audit opinion from the previous audit, letter of weakness or management letter from previous audits. You need to look at it and reassess it, whether some of those areas that you pointed out, because as an auditor, you always continue from where you stop in the last audit. Whether some of those areas have been closed out. Then you need to develop the overall audit strategy. In developing your overall audit strategy, you have to factor in the scope of the audit, how soon the audit will be completed, and what direction is the audit going to take. Okay? And also in planning, it's not when you start the audit, you don't say that, oh, I think I need one more staff. No, you must have done that before the audit starts. So you must have decided on the resources required during the audit in terms of the manpower, some system that you need, or maybe there's some other document that you need. All of this must have been arrived at the planning stage. Then you must develop a detailed audit plan regarding the nature, timing, and extent of the audit procedure. What's an audit plan? An audit plan is a what? It's a planned course of action of what the auditor intends to do or how he intends to do it. It's a plan or course of action of how the auditor intends to carry out the engagement. So you must have a detailed audit plan. Then you must establish necessary direction, supervision, and review procedures as you commence on the audit. You must be able to evaluate whether you are meeting, you are working in line with the plan or not. You must have a system in place that you use to check and track your progress of the audit. Okay? And also, if there's going to be any change in the audit strategy, you need to also be ensured that you have plans in place to perform additional audit procedures to be able to cater for those changes. When there's a change in audit plan, there might be need for you to perform some additional audit procedure, and you'll be able to provide, be able to cater for those procedures if they occur. All right. Then you must be able to maintain a communication with the what? With the management and those charged with governance. This TCWG means those charged with governance. That's the board of directors and the management. You must give them a heads up on how the audit is going. Okay. Now, the audit plan, like I said, is a planned course of action decided in advance of what they want to do, what the auditor intends to do. All right. Now, the plan itself enables the auditor to apply his judgment to the circumstances of the particular audit to decide how the audit will be conducted. For the auditor, in the audit plan, right, before the audit plan can be designed or completed, there are three factors that need to be considered before you draw up the audit plan. You need to consider the audit risk, you need to consider materiality, you need to consider the use of computer, how the computer-based environment is going to impact your audit engagement. I take it again. Before you draw up your audit plan, you must ensure that these factors are catered for or are considered. Number one, audit risk. Number two, materiality. Number three, the use of computer. That is, if you are going to audit a client-based environment that is based on computer, what impact will it have on the engagement? You need to be able to assess all of that and factor them in at the planning stage. All right. Now, the audit plan includes one, a description of nature, timing, and extent of the work of planned risk assessment procedure. Whenever I talk about a preliminary audit risk assessment, so this audit plan, what it places here is that after you have carried out the preliminary risk assessment, it allows you to know the nature, timing, and extent of the planned risk assessment procedure to be deployed. Number two, the audit plan must include a description of the nature, timing, and extent of planned audit procedure at the assertion level for each material class of transaction. That is, the audit plan should detail what? The nature, timing, and extent of audit procedure at the assertion level. Assertion level are those things that we discussed last time, which I said we are going to discuss more extensively when we get to chapter 8, audit evidence. That is the assertion based on transactions and events, assertion based on account balances, and assertion based on presentation and disclosure, which we are going to discuss when we get to chapter 8. Okay? So the audit plan must also ensure that the audit plan includes that all the engagements are in conformance with the relevant ISA. All the audit activities are in tandem with all the relevant ISA. That is, external confirmation, accounting estimate, use of the work of an expert, subsequent event, going concern and written representation. Okay? So that is for ISA 200. ISA 300 talks about planning and audit of financial statements. What this one is saying here is that when the auditor is designing the audit plan, right? Particularly designing the audit plan for the audit of financial statements, he must ensure that the audit is conducted in an efficient and effective manner. He must ensure that the audit is conducted in what? An efficient and effective manner. That is, the audit plan should be developed, detailing the expected scope of the audit and how the audit should be what? Should be conducted. Must detailed what? The audit plan must be what? Developed, detailing the expected scope, the area the audit is going to cover, and how the audit will be what? Will be performed. Must be what? Must be stated in the audit plan. So I say 300 that talks about planning and audit of financial statements states that the audit should be planned so that it is performed effectively. That is, all that needed to be done has been done. There are no areas that have been left uncovered or untouched. The auditor should also establish an overall audit strategy. Then, lastly, the audit plan should include measures for the direction, supervision, and review of the audit work. There must be an audit plan that shows how all of these things are done. Okay? So that is what we need to know. Any questions so far? Any question? Any comment? Any observation? Are we good to go? So before we wrap up, we are going to look at this last area, audit strategy memorandum or audit planning memorandum. Either you call it audit planning memorandum. Yes,
Hello, sir.
Ask your question.
Yes, sir. Okay, yes, before we move to the next floor, I wanted to ask, how is the audit plan different from the audit program? And who has the responsibility for approving the audit program? Is it the audit engagement partner or the audit, the managing partner?
Thank you for your question. Now, the audit program is embedded in the audit plan. Are you with me? The audit program, that audit program is embedded in the audit, it's part of the audit plan. All right? And the person that should sign the audit, there are two that are going to sign the audit plan. The audit plan will be prepared by the engagement partner. Okay? After he has prepared it, he will give it to the a senior partner within the firm. Where the
not necessarily the managing partner.
Not necessarily the managing partner. Managing partner might be too busy.
Okay.
Must have dedicated that responsibility to a senior audit partner within the firm to sign it off. All right. How are you to answer your question, Mr. Osman?
Yes, sir. Yes, sir.
Okay. So we go to the last one for today. Can we discuss this one today or we leave it from here? Okay, we are going to continue from here next time. Audit strategy memorandum. We are going to continue from there time. Okay. So, any question, any comment? The class is hereby adjourned to the next time we are going to meet. Chapter 7 is what we are discussing now. Any question, comment, observation for anybody? Are we good to go? No questions? There are some of my students that they talk. I'll be calling down their names now. Madam Eileen, any question? Madam Olabisi, any question?
No questions, sir.
No questions, sir.
Okay. Okay.
They answered the question I wanted to ask. You said we are on chapter the class late.
Okay, when did you join? Madam Olabisi, when did you join the class?
Joined about 30 minutes ago, but I will watch the replay. I have
Okay.
network issues.
If you have any issue, you can always reach out to
Yes.
me, right? You have my number. All right. Thank you. Mr.
right.
Edet, Anete, any question? Mr. Femi Balogun, any question?
No question from me.
No question, sir.
Okay. Then, is this a lady or a guy? Idehe Maris. Any
No
question,
sir.
Okay. That means we are all good, right? He's always ask question. No? The people that are always ask question here are Mr. Usman, Madam Molara, and Mr. Moses. Others, you don't ask questions, please. Let's ask questions. So I know that maybe it's clear because I try to be as explicit as possible in my explanation. Maybe that's why you don't have questions. But in case you have any question, whether in the class or maybe after the class, you can always reach out to me on WhatsApp, okay? Or call me if there's a need. Okay, I'll be willing and ready to attend to any question from your end on any aspect of the syllabus, chapter 1 to chapter.
Hello, sir.
Yes, I'm with you.
Sorry, there's something I want to find out from your end. I don't know
Please
if
go
it's
ahead.
part of this class anyway. A friend of
Please go
mine
ahead.
was even telling me that if you are writing an audit ICAN exam, you don't tend to use your own personal English too much. You have to stick to the language.
That is very correct.
Okay.
That is one of the reasons why this class is OD now, to build your audit terminologies for the exam. What we are doing here is able to build up your what? Audit terminology. There is a way you speak as an auditor that will command respect, and the examiner is like, oh, this person knows what he's doing. For instance, you want to write something like this. You want to say that the auditor must ensure that he gathers information, documents, and all of this. That's what you are writing. And you have another student that said that the auditor must gather sufficient and appropriate audit evidence. Who do you think the examiner will be more impressed with, Mr. Moses?
The person
Mr.
that
Moses.
mentioned the evidence. The person that mentioned the evidence.
So that is the essence why we are in this class. To build up your what? Your audit terminologies and for you to have a proper understanding. Not that you will not score mark when you write in your own English or your own language, in your own simple English, but you will get more mark when you use the right audit terminology. And that's why one of the reasons why we are discussing in this class. Is that clear, sir? Mr. Moses, are we together?
Very clear, sir. Very clear, sir. Thank you, sir.
All right. So that goes to everybody. You need to, the end of this class is for us to, first of all, understand this paper. Number two, to build up your audit terminologies. You can't be writing as though you are just an accounting graduate. There's even between an accounting graduate and a chartered accountant. All of us on this call now, we are potential chartered accountants, except me. I'm already chartered with over 20 years experience. But for those of us on this call, we are prospective chartered accountants. We have AC. It's just the A that we are trying to get to become full chartered accountant. Okay? So you need to start to develop the vocabulary. And that's why you see now taking time to explain most of these things. All right? So the class is hereby adjourned. Should there be any need for you to reach out to me, you have my number. My number is always available, whether for calls or for WhatsApp chat messages, whatever. I'll be ready and willing to assist. Okay? So thank you so much for your time. Thank you for joining.
Hello, sir.
Yes. Yes, that's your
question.
What has been
happening to our evening classes, sir? If you can clarify. Because for 2 weeks now, that lady, we have not heard from her.
Thank you very much. So what happened is this. We have another lecturer that is taking our time in the evening. Now, the lady for the evening, the other facilitator for the evening, has another program for the daytime. Otherwise, she will have been the one to take up the class today. She's not available in the daytime, except for evenings. So what we are trying to do now is to, number one, to see how we can harmonize the timing with the other facilitators that want to use our time in the evening time when we are not having classes. Ordinarily, she would have supposed to be the one to take the class today, this morning, but she's not available in the time for the time being in the morning, except for in the evening. So hopefully, for the month of March, we are starting March tomorrow, right? For the month of March, she will be available in the evening time. And if it's not available, I will let you know. I'll communicate on time. But be rest assured that whether she's available or she's not available, we are still on the right track. We are going to finish in good time before the exam.
All right, sir. Thank you, sir.
All right. Thank you very much. So there will not be class in the evening today. So for those that are taking CS, they will be using our time for the evening time, you understand, for today. So thank you very much. Enjoy the rest of the weekend. Enjoy the rest of the weekend. Take care. Thank you. Bye.
Thank you, sir. Thank you.